Casualty insurance. Section 176. Casualty insurance is insurance covering loss or liability arising from accident or mishap, excluding certain types of loss which by law or custom are considered as falling exclusively within the scope of other types of insurance such as fire or marine. It includes, but is not limited to, employer's liability insurance, motor vehicle liability insurance, plate glass insurance, burglary and theft insurance, personal accident and health insurance as written by non-life insurance companies, and other substantially similar kinds of insurance. Section 27. A concealment, whether intentional or unintentional, entitles the injured party to rescind the contract of insurance. Section 29. An intentional and fraudulent omission, on the part of one insured, to communicate information of matters proving or tending to prove the falsity of a warranty, entitles the insurer to rescind. Section 45. If a representation is false in the material point, whether affirmative or promissory, the injured party is entitled to rescind the contract from the time when the representation becomes false. Section 48. Whenever a right to rescind the contract of insurance is given to the insurer by any provision of this chapter, such right must be exercised previous to the commencement of an action on the contract. After a policy of life insurance made payable on the death of the insured shall have been in force during the lifetime of the insured for a period of 2 years from the date of its issue or of its last reinstatement, the insurer cannot prove that the policy is void ab initio or is rescindable by reason of the fraudulent concealment or misrepresentation of the insured or his agent. Section 74. The violation of a material warranty, or other material provision of a policy, on the part of either party thereto, entitles the other to rescind. A person insured is not entitled to a return of premium if the policy is annulled, rescinded, or if a claim is denied by reason of fraud. Section 113. If a representation by a person insured by a contract of marine insurance is intentionally false in any material respect, or in respect of any fact on which the character and nature of the risk depends, the insurer may rescind the entire contract. What may be insured? Section 3. Any contingent or unknown event, whether past or future, which may damnify a person having an insurable interest, or create a liability against him, may be insured against. Subject to the provisions of this chapter. All rights, title and interest in the policy of insurance taken out by an original owner on the life or health of the person insured shall automatically vest in the latter upon the death of the original owner, unless otherwise provided for in the policy. Insurable interest. Section 10. Every person has an insurable interest in the life and health of himself, of his spouse and of his children, of any person on whom he depends wholly or in part for education or support, or in whom he has a pecuniary interest, of any person under a legal obligation to him for the payment of money, or respecting property or services, of which death or illness might delay or prevent the performance, and of any person upon whose life any estate or interest vested in him depends. Section 13. Every interest in property, whether real or personal, or any relation thereto, or liability in respect thereof, of such nature that a contemplated peril might directly damnify the insured, is an insurable interest. Section 14. An insurable interest in property may consist in an existing interest, an inchoate interest founded on an existing interest, or an expectancy, coupled with an existing interest in that out of which the expectancy arises. Beneficiary. Section 11. The insured shall have the right to change the beneficiary he designated in the policy, unless he has expressly waived this right in said policy. Notwithstanding the foregoing, in the event the insured does not change the beneficiary during his lifetime, the designation shall be deemed irrevocable. Section 12. The interest of a beneficiary in a life insurance policy shall be forfeited when the beneficiary is the principal, accomplice, or accessory in willfully bringing about the death of the insured. In such a case, the share forfeited shall pass on to the other beneficiaries, unless otherwise disqualified. In the absence of other beneficiaries, the proceeds shall be paid in accordance with the policy contract. If the policy contract is silent, the proceeds shall be paid to the estate of the insured. Double insurance. Section 95. A double insurance exists where the same person is insured by several insurers separately in respect to the same subject and interest. Section 96. Where the insured in a policy other than life is overinsured by double insurance. The insured, unless the policy otherwise provides, may claim payment from the insurers in such order as he may select, up to the amount for which the insurers are severally liable under their respective contracts. Where the policy under which the insured claims is a valued policy, any sum received by him under any other policy shall be deducted from the value of the policy without regard to the actual value of the subject matter insured. Where the policy under which the insured claims is an unvalued policy, any sum received by him under any policy shall be deducted against the full insurable value. For any sum received by him under any policy. Where the insured receives any sum in excess of the valuation in the case of valued policies, or of the insurable value in the case of unvalued policies, he must hold such sum in trust for the insurers, according to their right of contribution among themselves. Each insurer is bound, as between himself and the other insurers, to contribute ratably to the loss in proportion to the amount for which he is liable under his contract. Reinsurance. Section 97. A contract of reinsurance is one by which an insurer procures a third person to insure him against loss or liability by reason of such original insurance. Section 98. Where an insurer obtains reinsurance, except under automatic reinsurance treaties, he must communicate all the representations of the original insured, and also all the knowledge and information he possesses, whether previously or subsequently acquired, which are material to the risk. Section 99. A reinsurance is presumed to be a contract of indemnity against liability, and not merely against damage. Section 100. The original insured has no interest in a contract of reinsurance. Life insurance. Section 181. Life insurance is insurance on human lives and insurance appertaining thereto or connected therewith. Every contract or undertaking for the payment of annuities, including contracts for the payment of lump sums under a retirement program where a life insurance company manages or acts as a trustee for such retirement program, shall be considered a life insurance contract for purposes of this code.